We're ready to go. Hey you guys, my name's Jeff. Welcome to the channel. And if you've been here before, then welcome back. Today, I'm going to show you how Warren Buffett decides on a price that makes sense when he's thinking of buying a stock. So no matter where you are in your investing journey, I guarantee you that understanding this mindset and this approach to investing could really have a positive impact on how you think about investing in your future. Before we get started, just as a reminder, this is not financial advice. Let's get started here. Warren Buffett, first and foremost, doesn't think about buying stocks. He has said it. He doesn't like to think about buying stocks. Instead, he thinks about buying a business. Let that sink in. To distinguish this from the idea of buying a stock, one of those things that has a dollar amount that just goes, $112.72, and then it just kind of goes up and it goes down, and you're staring at your phone all day and you're watching the stock price jump around, and it's green and it's red, and it's easy to just kind of freak out and not really know what price makes sense. And you start getting really focused on the price yesterday or the price last week, and then where you think the price is going tomorrow. But you don't have any grounding. So I'm going to show you an analogy. I'm going to show you something real and physical that will help you get an idea, get your mind around what you would pay. Let's just take a look here. Right here, I have 2 cans of tennis balls. Now, I happen to play a lot of tennis, which means I buy these from time to time. So I have an idea of what these cost. If you buy a can of tennis balls, there are 3 in it, you will usually pay about $3 for a can, right? Which works out to about $1 a tennis ball. And here you go. 1, 2, 3. Oh my goodness, what luck. They even happen to be number 3. Was that showing there? Can we get this to focus? Come on. And they're even number 3 tennis balls. So you get 3 tennis balls for about $3. Now, sometimes I'll go to the sporting goods store and they're selling a can of these, and they're selling them for like $4, $4.50 maybe for a can. And so you go ahead and you buy it. Now it's really only worth about $3, but you need these tennis balls to play tennis, so you pay a little more. But sometimes I'll go to one of these, Big Five or some sporting goods store, and they'll have them on sale. And they'll be like, $2.75 for a can. So you're getting a little bit of a discount. And so, but the important thing is, I have a range of prices that I know make sense for tennis balls. If I walked in there and said, oh, I need to buy these, and they said, yeah, it's $7, I know that that's way too much money. I make a decision going in on what they are valued at, what my value is for buying a can. And sometimes I might pay a little more, and if I can, I'd rather pay a little less. So this matters when we're talking about Warren Buffett's approach to investing in stocks, because he figures out ahead of time what he'd pay for that business. So if you wanted to use that same approach, don't look at the stock price. You don't want to be thrown off by what the stock price is today, because that will maybe affect you slightly. So he said he tries not to look at the price if he can avoid that. Instead, he values the business. So let's take a look at Amazon, okay? Now, I've been following this company for several years, okay? In fact, and I should say, I own shares of Amazon, so I want to disclose that to you. But I think that Amazon, the whole company, this is based on my understanding and reading and learning and being a shareholder and understanding Amazon Web Services, that the whole company, if I were to pay for it, if I had that kind of money, would be worth $1.25 trillion. So that's the starting point. Whenever you value a company, try to figure out, what it's worth. You have to come up with a dollar figure. And then the next step is you have to figure out how many shares of that stock are outstanding. This is Buffett's approach. Now, I just Googled this for Amazon earlier today, and I found out that the total number of shares outstanding is 10.189 million, okay? So now we have these two numbers. And so what you do is you divide the total value of the company, by the number of shares outstanding, and you will come out with $1, which is now your estimate of the fair value per share. $122.68. Okay. So if I wanted to buy Amazon stock based on what I value the company at, I'd say a price of $122.68 would be a fair price to pay. Then what I want to do, if it's at all possible, is to get a discount off that fair value. Because if I can, since I cannot change the number of shares outstanding, that's a set variable, and I've decided that this is what the company's worth, what if I could get a 20% discount? That would make the company worth 1.0 trillion. That makes sense, because we started at 1.25, so if you just take 20% off 1.25 trillion, you get 1 trillion. And on a per share basis, that would mean the shares were valued at $98.15. Here we've got a discount of, and I'll just write it, 20%. So if you could get a stock and you could buy the shares there, you'd be getting a bargain. So what I did today's the 24th of February 2023, is I looked at the share price. And the share price at the close of the stock market today, Friday, is $93.50 per share. So what we can say is that it's much cheaper than what I estimate it's worth on a per share basis. It's much less than that. And it's even less than that. It's less than the 20% discount. So according to my math, I'm getting more than a 20% discount if I were to buy the shares of Amazon today. It means it's cheap. Now, that's pretty good, but I have to compare this to other things. Any investor, whenever you're making an investment decision, you're comparing what you're looking at now with your other options, okay? So I'm comparing Amazon to VTI, which is the Vanguard Total Stock Market, because with that particular investment, I get more than 3,000 different stocks. It's very well diversified. And, I think that for me, this is just a good comparison. With Amazon, I'm taking on a lot more risk, right? Because it's one company. It's company-specific risk. So if I buy that stock and something happens to the company, whether it's within the leadership or within its competitive position in this sector, I'm open to a lot of risk, and there's nothing else to absorb that. Not like with the Vanguard Total Stock Market ETF, where there are thousands of other companies that I'm investing in. So what I like to do, in case my math was a little off, or maybe my assessment of the value of the company is wrong, is I'd like more than a 20% discount. If it's at all possible, I'd like to get better than a 20% discount, okay? If I can, I'd like to buy the whole business at less than $1 trillion, okay? I mean, what if I could buy Amazon not at 1.25 trillion, not at 1 trillion, which is the 20% discount, but if I could get it at 40% off, okay, that would be at $750 million. 750 billion, sorry. If the company, instead of, the 1.25 trillion, were 750 million, then the price per share there is $73.61. And that represents, like I said, a 40% discount. So now we're looking at things like a real investor, like a real Warren Buffett style value investor. So we saw that the 20% discount would be buying these shares at $98.15, and the 40% discount is at $73.61. Right now at $93.50, we're nowhere near that $73.61 mark. I mean, we're far from it, right? And there's a good chance we're never going to see it. It'll just never go that low, and Amazon will never be valued as a $750 billion company. But maybe there's somewhere in between those two spots, in between $98.15, which is 20% off, and we're already below that today, right? $93.50. But somewhere between $98 and $73. So somewhere between 20 and 40, we could buy these shares at 30% off. A 30% discount is going to be more expensive than the $73.61, but it's going to be cheaper than 122 or any of these numbers. And this is showing you the process, okay, of narrowing things down and finding a range. So if we start with 1.25 trillion as the value of the company, if we were to go with a 30% discount, that would put the share price at $85.88. 85.88 is the 30% discount. Now, will Amazon ever get that cheap? Well, your guess is as good as mine. I don't know, and nobody knows. I think that waiting and being patient can make a lot of sense in markets like this. If you know what you're doing and you really want to buy a stock, I think the patient investor is often given the chance to buy at really, really attractive prices. So I hope this info has been useful to you. If it has, and you like this video, please click the thumbs up button. And if you haven't yet subscribed, my goal here is to get to 1,000 subscribers by Easter. I forget what day Easter is. It's somewhere in the middle there of April. But let's get to 1,000 subscribers. If you haven't subscribed yet, and you would just click that little button, it'll help me get there sooner. I don't think that's an impossible goal. The journey of 1,000 subscribers begins with a single click. I'm so glad you watched this video today, and I look forward to seeing you in the next video.